Good morning. My name is Lori Simmons, and I'm President and CEO of Green Living Enterprises, and I'd like to welcome you to the 2013 Green Living Business Forum and opening day of the 7th Annual Green Living Show. Woohoo! Yeah. I'd like to thank our Green Living Show presenting sponsors, the Province of Ontario and Samsung, whose support has helped us grow the attendance year over year since our launch in 2007. In just a couple of hours, over 40,000 people are going to come through those doors, and over the next 3 days, they're going to visit our many features and main stage attractions. They'll shop from thousands of healthy and sustainable products, explore our Eco Kids Zone, and visit our freshwater, rivers, and Great Lakes features, wander through our forest, visit our green building and home design and decor center, and taste the very best Ontario food, wine, and beer that our celebrity chefs are serving all weekend. Our attendees can take yoga classes, watch eco-fashion shows, and test drive the most innovative technology on the market today, including the inaugural 2013 Canadian Green Car Award winner, which will be announced live on this stage by the Automotive Journalists Association later in this program. I know that you've seen some of the finalists right here behind you, and we'll be excited to hear who the winner is. KPMG has delivered the envelope, and the judges have got all their entries in, all their answers in, so we'll be waiting to hear who is the winner. Each year, this business forum hosts panels of experts to tackle challenging subjects. Our expert guests have shared and debated the most innovative solutions that drive the economy while solving social and environmental issues. On this stage, tax incentives and government rebates have been announced. Solutions to job creation have been debated. The greening of Canada's resource sector has been explored, and the most innovative early-stage technology has been examined. And this morning, we're very pleased to present the case for impact investing and demonstrate how the power of business can influence social and environmental change. All of this quality content is not possible without the generous support of our sponsors. So I'd like to thank Investeco, RBC, Fogler Rubinoff, partners in Project Green, and Bullfrog Power. Thank you. Now, without further delay, it gives me great pleasure to welcome back to this business forum stage the EMCEE and CBC's host of Power and Politics, Evan Solomon.
I'll give you a kiss there. Hi, guys. Thank you so much for that, Lori. Great to be back. Great to be, I'm not just going to say it out loud, but nice to be out of Ottawa where there's 20 centimeters of snow coming today. So it's positively balmy here. Amazing to see the Green Living Show keep growing. And I've been a part of it for a while, and I know a lot of the panelists today, and I've worked closely with a lot of them. So it's going to be a really interesting morning. We'll try to get a dialogue. We'll try to get some questions going. We always try to have a dialogue. The time will go quickly, so there's a lot of panelists to get to. We'll have two panels talking about the emerging trends in business, investment, and clean capitalism. It actually, to me, is a really interesting weekend to talk about this. Later this morning, I'll go to Montreal to go to the NDP's policy convention, and it'll be really interesting to see how many ideas that you're talking about here make their way into those kind of policy discussions. And then on Sunday, I'll be at the Liberal Leadership Showcase Announcement Convention-a-thon, whatever they call it now. And I'm not sure who's going to win that. It's a bit of a mystery. But it'll also be interesting to see how many ideas that you're talking about here talk about there. I mean, on the Trudeau team, of course, there's guys like Jerry Butts who have been very, very active. So it will be interesting to see how they're articulated. And then, of course, given the new political landscape, how the government on a federal level may or may not respond with a couple of new pressures. One of the pressures is basically the shift out of a peak oil period because of what's happened in Bakken and the move towards energy independence has had a radical knock-on effect in terms of energy policy in the U.S., and it will have a real knock-on effect in terms of domestic, both on a state level and on a provincial level, how people approach clean capitalism and new ideas. So in that context, I think we're at a particularly interesting moment to talk about these ideas and to see where they cross over into the business world where there's opportunities and in the policy world. So we'll talk about that. The first panel will talk about impact investing, how financial resources can be harnessed to produce positive social, environmental, and commercial advances. And I hope we get very practical in that discussion. We'll discuss roadblocks, of course, successes, and the tools that are needed to accelerate the growth of impact investment. Before the panel starts, just out of interest, does everyone, hands up if you don't know what impact investing is, or the definition? Okay, so we'll go over it very briefly. I mean, you probably do know, but I appreciate what you're saying during. That's good. Right, no, I want to do it. I just don't want to spend too much time going over base. I think this crowd wants to get into sort of higher issue levels, but we'll just establish the baseline. Then after we finish that panel, we've got members of the Council for Clean Capitalism, which is Corporate Knights, great magazine, spearheaded the creation of this council, which is a multi-industry group of executives from top-tier corporations who are pushing public policy that rewards resource productivity and responsible business. Again, last night there was the Public Policy Forum dinner. Sherry Austin. Hi, Sherry. And many people who, again, I'm interested to see where the links between the kind of policies that are being discussed here are being discussed at other levels, or whether this remains a kind of a niche area and where the crossover. So we'll try to push to get some of those linkages. They'll share their vision for a green economy, the public policies needed to support it, and the role of business. So let's get to it. I'm going to introduce the panel. There's a lot of them. So I guess one at a time in some sort of quasi-reality show thing. Julia Langer is this. What I'll do is I'll introduce them all and then they can all walk out. Julia Langer, the CEO of the Toronto Atmospheric Fund. Julia, you can start walking out. Joanna Reynolds, Program Manager of Mars Center for Impact Investing, is here. Bart Houlahan. Look at everyone. You can all cheer. You don't have to just cheer for your team. Bart Houlahan, co-founder of B Lab, which certifies B Corp benefit corporations. Erica Barbosa Vargas is the program officer of the J.W. McConnell Family Foundation. Come on, they're out west. You can still cheer. Yeah, you have to bring your own crowd here, right? I didn't realize that. Jane Ambachtsheer, partner and global head of responsible investment at Mercer. David Martin, the Capital for Aboriginal Prosperity and Entrepreneurship Fund, also known as the CAPE Fund. Sandra Odendahl, the Director of Corporate Sustainability with the Royal Bank. And just in full disclosure, Andrew Heintzman, my former business partner, and a guy, he supported me for many years. And he can support you as well. Anyway, it's a really good panel. Okay, let's do this once. What's your name? George wants to know what impact investing is. So we'll do that once. All right, Jane. Julia, why don't we start with you?
Impact investing is when you put your money towards your mission, whatever your mission might be, and you have some idea about what you want to accomplish with your money beyond just financial returns. Right.
Okay, so we're going to spend the first 2 minutes just going over the biggest successes and the biggest roadblocks, and then, so I'll just continue with you, and then we don't necessarily have to go in a line, but what do you think the biggest successes thus far in impact investing are, or the biggest roadblocks?
Success is when you can actually get a result from your investment. So speaking from Toronto Atmospheric Fund's perspective, we have driven down greenhouse gas emissions in Toronto through some of our investments in renewable energy in the city and energy efficiency. So finding ways, it's also very successful when you can find ways to do investments that have been blocked by in the conventional terms. And so the flip side of the success is the challenges. So sometimes you just have to find innovative ways of doing those transactions in order to get the results that you want. And that takes time and money and effort and a lot of head banging against brick walls. But if you're doing it for impact, if you're doing it for mission, it's worth the time and the effort, and then teaching and spreading the word like at forums like this so that other people can do more impact investing.
Joanna, and pick up on that, because when you talk about, when Julia talks about, for example, driving down emissions, which is a good impact, but is it a direct impact of the fund? I mean, there's always the question of how closely people link the vehicle and the result. So in your mind, what's the success and perhaps the biggest challenge?
A success that's clear to that may be more clear to the audience here is what we're sitting in. We're here at the Green Living Show, and now we take that as for granted. We have a whole market opportunity, an entire industry that's been created around sustainable green products and services. So let's expand that to looking at other areas where we have wicked problems. Economic justice, we have examples of fair trade, and an entire span of business opportunities, customers, supply chains that have created around that, and around economic inclusion. And if we take an opportunity as well as looking at the momentum internationally around driving change with our investments and our businesses. It's looked at from the Harvard Business School, for instance, Michael Porter, and creating shared value, taking the issue that you want to see change and putting it into the center of your business and seeing what opportunities arise. And all of you here have done that. So it's taking that and expanding it and looking at how you can really make a difference with your business. So the biggest challenge, I would say, is making that accessible. So we need our financial institutions and our policies to get behind this and to support investment, make it accessible to people to get the type of a capital that they need to be able to make the difference that they want to see. Access to markets so that you can reach the consumers and the consumers who also want to be part of this solution. And we can see that here as well. 40,000 people are coming. They want to be part of the solution. So take advantage of it. There's opportunity there too.
There's 8 people on the panel, but I just want to press back to you one quickly. You say we need policies from the government. Just give me one if you were sitting there. What would one policy that you think would move the ball forward?
So a policy, oh gosh, there's so many. But one policy perhaps would be for this is, okay, let me think. For when we look at supporting not-for-profits in particular, allowing them to expand their revenue base so that they can start earning revenue in a way that makes sense for the not-for-profits to become part of this solution, and looking at how we can support investment. So government can help us by doing things that they've done with the Toronto Atmospheric Fund, creating endowments and creating funds that will allow business owners to get access to capital in an affordable way. That's not really a policy change, but I would suggest that people take a look at if you're interested, in the Canadian Task Force for Social Finance, Mobilizing Private Capital for Public Good. There are some 7 key recommendations for business and for government to get involved in enabling the system to work and perform to its potential in Canada.
Bart, your view on maybe what's needed, the successes, and maybe what's needed to move the ball forward on a practical level.
Sure. So first, success. Impact investing is the most rapid growing section of the capital markets. It is expanding quite rapidly. The counterpart is that it's tiny. I mean, it's tiny. It's $50 billion collectively globally in impact investing. And the question is, how do we get more money into that space? And there's been a variety of real challenges. The first is that, frankly, it's been difficult to quantify impact for folks. If you're trying to show investors that they're both making a financial and a social return with their capital, how do you do that? How do you demonstrate that there's been both a positive return on the financial side and the social side? For so long, this space has been the providence of unicorns and rainbows. It's been this qualitative description of what the impact was, and we need to move the dialogue into the language of investors, which is comparability, hard metrics, numbers, that makes it easy for people to move capital into this space. To attract more mainstream capital, we need a taxonomy that describes what impact investing is and the impact that's created, and then we need a rating system that allows normal investors to be able to compare and contrast individual companies and individual funds and how much impact they've actually created.
All right, and we'll talk more about that. I think that's an interesting rating system. Erica, what's your view? Again, let's just go along. I'll ask the same question, just in terms of the roadblocks, and again, what you think would be, in your view, the obstacle that you could remove to move the ball forward.
So for us, great part of something along the same lines of what everybody else has said in terms of success, we're also looking at how much capital can be driven into the nonprofit and charitable sector, and then the types of increased impact that can be attained by bringing that capital in the market space. I would say that as a foundation, foundations are seen as investors that can come in and lead the space to bring additional investors through their impact first focus. However, I think that there's still a lot of roadblocks in terms of regulation for foundations to be able to move into the space significantly at a scale that is measurable. And I would say that one of the underlying issues in terms of regulation and policy is the lack of recognition of the hybrid and blended model of enterprises. So still working under the dichotomy that only charities and nonprofits generate public good and benefit, and that private businesses just care about money making.
So just on that, and we hear a lot of that. Obviously this is one of the in that particular sector, that's a huge challenge. In terms of removing that, it also poses real problems. Has there been a press, in your view, a model to remove that, to allow that kind of shared model?
We're starting to see that. There's been significant changes and moves in the UK as well as in the US in various states with new corporate structures. The benefit corporations is one, and there's recent legislation that was passed in BC, I believe, for also a new form of legal structure. So hopefully we would see that moving along the across provinces as well.
Jane?
Thanks. I take a bit of a different perspective. I work at Mercer, which is one of the world's biggest kind of mainstream traditional investment consulting firms. We consult on $5 trillion. And I think there's two key barriers around impact investing from the perspective of most of the investors we work with. First of all, if you ask them if they know what impact investing is, they'll say no, for the most part. And then when you explain it to them, they'll think it's a bad idea. So those are, two pretty significant barriers. And I think that ties in. Why
do they say it's a bad idea, though? It's important. What is the reason for the bad idea?
Sure. It ties in, I think, with this kind of hard-grained sense that anything around sustainable investing or impact investing is around giving up something, giving up return or increasing risk. And that as fiduciaries, it's not something that they're allowed to do. So we take a bit of a different perspective. We have a small portion of our client base who want to achieve social impact along with financial impact, and these people on the panel are all the leaders who are pioneering that, and because of them, there are specific opportunities they can pursue in those areas. But from the broader perspective, for the other 95% of the client base who just want to optimize their risk-adjusted returns, one of the key areas we focus on is climate change. And we've done a lot of work looking at how climate change can impact long-term risk-adjusted returns. And it can really impact it in a positive way if we successfully mitigate, or in a really bad way. So from that sense, we know the International Energy Agency, the OECD, lots of others are saying we need trillions of dollars of investment in clean energy infrastructure, et cetera, and we need the institutional investment community to participate in those investments if we're ever going to be successful. So on the one hand, you need their involvement to achieve that impact, What we're looking at is, on the flip side, if we don't successfully mitigate, there will be risks which will negatively impact their outcomes. So they have to do it from that perspective.
But Jane, on that issue, it's the problem of collective action, and I guess you could call it first mover disadvantage. Everyone says, why should I be the first mover to mitigate climate change? I'm the loser, I increase. This is the trouble with collective action. So it's true that there's a general risk environment that goes up that may impact generally, but it actually impacts equally on everybody's investment, whereas the actor may have a disadvantage acting first. How do you get over that?
Yeah, I mean, I actually think we can flip it the other way and say, most big investors are looking at infrastructure investments. If you're making a 10-year investment in infrastructure and in 5 years carbon's priced at $200 a ton, would you rather have green infrastructure or brown infrastructure in your portfolio? It's a pretty simple question. But it's not one that most committees are really having a good debate about. So I actually think there's a first mover advantage in many ways. But I also think the regulation issue is really important, and that we need to see investors get more involved in discussing, leveling the playing field for conventional energy and renewable energy, for example. That would give them more safety as they allocate assets to this area.
David.
Well, I guess I can't just say what they said.
You could.
No,
you could, but I know you can add more.
Okay. From my point of view, I think one of the great successes of impact investing is it's allowing other people other than the government to get involved in solving a lot of social problems. It's allowing the private sector to get involved, and it's allowing others who see themselves as change makers. They can now see themselves as sort of entrepreneurs or social entrepreneurs to get involved. The obstacle, and I agree with everyone, all the points that have been made. To me, the biggest obstacle is just sort of a national mindset, actually. We have we think the government has to be involved in a lot of things in what we do. And it's ironic in a way. What we ought to be doing is fighting more and more for a real free market system. So I believe a free market is the best allocator of resources and capital. And we like to talk about free markets, but we don't live in free markets. And the most ironic thing is, it's not so much the left that's sort of been attacking free markets. It's been sort of right-wing government in the Western democratic world that have been systematically undermining the free market system. So here in Canada, I love...
Just explain that. Do you mean, for example, in subsidies to certain energies and that
exactly.
kind of thing?
I love to talk about and love to hear about great ideas about incentives and all that for green investing and other policies directed at that. But at the end of the day, if a price was put on carbon or pollution or all the externalities were included in the cost of what we do, in everything we do, we won't need any of that. And it's just a much truer economy. And so I just find we've got to get past this idea of looking at things as an additional tax to us. We'll probably get into it a little bit more in this, but around the environment, the fact is, Canadians pay for an enormous amount of the cost of cleaning up environments and the impact of the environment on our tax system, on our health care costs is incredible. But all that's happening in that world is that we are picking up all the costs while the shareholders of these businesses are privatizing the profits. And unfortunately, more and more of our economy is owned by foreigners, so it's not even Canadians who are benefiting as much from that. So I think we got to change a national mindset around this.
All right, and we'll talk a bit more about that triple bottom line. I also just want to get into, not now, I want to get Sandra involved and Andy, but how impact investing, just in terms of the work that you're doing in the Aboriginal community, because I think it's actually also very vital. Sandra, from a bank point of view and a corporate sustainability, what's your view on that?
So in terms of some of the challenges, I think one of the challenges that we see, and I see it here a little bit, is certainly around nomenclature, although there's a bit of convergence. You know, at least in our institution right now, where we have launched a social finance initiative to look at this whole idea of how do you use private capital for public good, we're talking about impact investing, very much focused on investing dollars in private companies, usually small, you know, entrepreneurial type companies that have a social or environmental purpose as the core of their business. So I separate that from what I would call more traditional socially responsible investing, where you might screen a series of large corporations and decide whether or not they meet certain criteria. So I'm going to actually focus my comments on you know, some of the successes and challenges in what we call impact investing, and this is the private market. This is the companies, many of whom are actually here. They're the ones that don't have the booths that you can see from 400 meters, but you know, the little booths with cool new technologies or really cool things with an environmental as well as a profit motive. So in that space, which is a relatively new area for us, it's been really interesting. In terms of the opportunity that we see, there's definitely opportunities for Canadians. There's also opportunities for investors who want to invest for impact. So the opportunity for us as Canadians in cultivating and nurturing these companies is that it's a new and better and more innovative way to solve some really thorny social and environmental issues that governments simply can't address themselves. They don't have the resources, they don't have the money anymore, and they don't really innovate as well as small companies do. So if we're going to solve a lot of social and environmental issues that need solving, we have to empower small business and entrepreneurs to figure out ways to do this. And yes, large corporations play a role too, but I'm not going to talk about that. So that's a huge opportunity for all of us as investors, and that is whether you're a small individual or whether you're a ultra high net worth individual, or certainly if you're a foundation or somebody with a large pool of capital. I think there's an enormous opportunity as well to put your capital to work, as somebody already said, in a way that aligns with your values and your mission. And you also should expect a return on this, on your investment. So I think there's huge opportunities. I think in terms of some of the obstacles, I think a few have already been mentioned. I know one of the ones that we have been hearing a lot about from particularly foundations actually, who do have large pools of capital, is that it's difficult for them to invest in, for example, limited partnerships due to the regulatory frameworks in place. So that's something that I think people are tackling. I think it was addressed in the Task Force for Social Finance. So just imagine if the billions and billions of dollars in foundation pools of money could actually go into funds, like Andy's or others, where they're holding a whole bunch of small investments in a whole bunch of small, incredibly innovative companies. Well, right now it's really difficult for that money to go there. So I think that's a huge challenge. And I guess a couple others I'll just rattle off, and then I'll hand the mic over. The challenge in doing these small, entrepreneurial, very cool investments in the next generation of companies is deal flow. So there's a lot of great ideas out there, but there's a lot that aren't investable. The opportunity, of course, is helping to nurture those companies and make them into things that are fully investable. And then other things with small investments is transaction costs and some of the things that just are hard to do with small companies, but we'll figure it out.
Okay, thanks for that. I think that really interesting policy ideas. Andy?
I've got 3 ideas of successes which I think are illustrative. One is microfinance, which obviously took off. And I think the key for that was when people saw that the bad loans were so low, that actually the risk-adjusted returns in microfinance were surprisingly good. The second one was organic foods, and that happened, I think, because people started getting worried about their own personal health, and that drove that industry. And the third is clean tech, which really started in here, basically. I mean, if you give one guy credit globally, you would have to give Nick Parker, who came up with the idea of clean tech. And I don't know if Nick's here today, but it really galvanized the venture capital industry around a risk-adjusted return that you can make in a new sector. And so I think those are sort of illustrative of success. So what success means for impact investing, I think, is when we don't talk about impact investing anymore, when all investing is impact investing. When we see that we have to calculate other things into our investing decisions as a matter of course. And how we get there, I think it's an iterative process. I think we build up these industries, and they start to have impact, and they also start to influence the public policy discussions. So when now we see the clean tech sector, the renewable energy sector, they have a real voice today that they didn't have 10 years ago. They can make an impact on our policy discussions to go in the direction that David mentioned, which is a real free market, a market where capital is incentivized to go to where capital needs to go to solve our social problems. So I think it's an iterative process, and part of it is building up parts of this space so that they can really become galvanized and become mainstream, and then turn around and impact the public policy discussions we have.
Go ahead, yeah, Julia.
One of the things that's coming out here is that we are at the front end, and being at the front end is always hard. Transition is always hard, and so we all have to know what role we play in the ecosystem. So, I'm looking at the past chair of our investment committee and a member of our board who called TAF the skunk works. You need the skunk works to, move to try things, fail, and then come up with innovations. You need then the handoff, so you've got Investeco, who's actually taking things from that sort of 2 million to 30 million. Then you need our, the RBCs to come in. So we all have to understand the role that we are playing and the education that goes all through that ecosystem. Jane's point about fiduciaries cannot be underestimated. I have so many people call me and say, oh, interesting things that TAF is doing on impact investing. We'd like to do that too. First question, do you have an investment committee that knows the first thing about this, so that if an impact investment opportunity walked in the door and slapped them in the face, would they know how to evaluate it? Because if you don't, it is irresponsible to invest. And so, we need to actually understand that the knowledge and the skills that are needed to do this responsibly and prudently, and that is our roles. We have to, we all have to be moving that out into the marketplace in order to scale up, to get to that mainstream.
But I think let's assume that this is the skunk works, the vanguard, but I think that may be a faulty assumption, because you want to assume that this is the beginning of this kind of tsunami of change that's coming. But what if it isn't? What if it, like in a very complex, varied world, it's essentially a financial niche market, $50 billion globally. The financial markets are, it's barely registers, right? And it's not growing. And so my question to all of you, and I know Joanna wants to get going, and we've got some questions coming, but Andy talks about there's three elements that we've talked about. There's the role that Sandra talked about of investors. Why should investors solve social problems, right? They're not necessarily investing for that. Some are, but as we like to talk about, some people are into everything. There are people that ride unicycles. It's an interesting thing. You will find some people to do everything. But the question is, you're talking about profound change. So 1, 2, the role of policy to really start, is it a leader or is it a follower? And 3, the role of the public to punish brands that are not functioning according to the so-called triple bottom line. And then companies react in ways where they recognize it hurts their bottom line if their corporate behavior is not in a more profound way reflective. Joanna and then Jay.
Okay, these are great points. One thing I'd like to get across, as much as we are vanguards, we're also using the tools and the products that everybody else uses. This is not so out of, it's not an unusual request that we're looking at. We're using loans, we're using equity investments, and it's into business structures and financial structures that we're all familiar with on the whole. And the second point is, you're right, it needs to be accessible, it needs to be easy to use and make sense for the business, because if the business doesn't do it well, then it won't have the impact that it hopes to achieve. And the third point that I wanted to make is just the inevitability of this. We are faced with these complex issues and our backs are against the wall. And larger corporations are seeing this and they're recognizing that they need to make sustainable investments or impact investments in areas in order to keep their business successful. For instance, if Nestle paid market value for water today for their products, it would be more than they would than their entire value of their company. If as an investor, am I going to invest in a gene company that takes 10,000 gallons of water to make their product, or a company that's using gray water in an efficient way? So the opportunity for the investor is clear because we're looking at limited resources and we're looking at issues that also affect people. So it's a wise business decision to look at this, I think, as well. And B Corps are doing that quite well. So I know, Bart, you'd probably have something to say there.
I think those are some great points. There's arguably a water bubble, right, in the markets, in the stock markets. There's a carbon bubble in the stock markets, and when these resources are priced, then investors which have exposure to these underlying bubbles will feel the adjustment. And it's that financial framing which needs to be discussed, and the Carbon Tracker Initiative has done a lot of work around this, and it actually fueled the campaign in the US, the 350.org campaign, which is going on. It's hit 300 universities in the US, and it's a divestment campaign to divest from fossil fuels based on the do the math question. That 60 or 70% of the world's oil reserves, which are in the stock price, can never be burned if we're going to stay below 350 parts per million. So if that bubble bursts, there will be a financial adjustment. So, I mean, in our view, simple divestment from fossil fuels, particularly in the Canadian economy, is not a straightforward answer. But it does get it on the agenda of fiduciaries, and there are a lot of things you should do. You should engage with companies, you should engage with regulators. You can look at carbon tilted indexes to keep a broad market exposure, but tilt away from the high carbon companies. There are these indexes out there, and nobody is investing in them. And we need a wake-up call, and we need to have more people on committees. And to Julia's point, we've talked about this before, that we should have a little register in Canada of people who are able to talk to these issues, who are available to sit on investment committees, right? To make sure we improve this dialogue. And just one last point, I thought Andy really touched on something that was important in terms of the fact that all investing is impact investing. And Steve Leidenberg at Harvard has done a lot of work looking at what is the social purpose of asset classes? What's the social purpose of equity markets, right? It's to allow individuals and others to access the growth of certain companies. Fixed income, infrastructure, they all have a social purpose. And we've gone away from that, and they're all having these kind of often negative impacts. And I think it will be, in part, the citizen pushback against those negative impacts that forces committees to look at impact from a financial perspective and evolve the kind of construct to achieve better financial and social outcomes. And I think those two things go together. They're not a trade-off.
Yeah, I'd add to that. I think, frankly, if we're sitting here 10, 15 years from now, and this is a niche market, and we've got a lot of other problems that we have to be dealing with. Because that will reflect a society that hasn't taken into any of what we're talking about here into account. I hope it's much more a world that Andy was talking about, where we don't talk about impact investing because everything is impact investing. Okay, but one thing one can be doing is asking our policymakers, kind of reframing the narrative a little bit. But asking our policymakers, how much do we pay in taxes because we're not doing some of this stuff? Often the narrative is the other way around. If we do something, it's going to raise our tax, or it's going to cost us something. We got to start asking them to start putting figures on the table of actually how much we are paying more in our taxes because of either inaction or not having, as we were talking about, a pure sort of a free market.
Yeah, I know Sandra wants to get in there. I will, there's a question out there, and we got about 13 minutes, I think. Oh, there is no audience Q&A, apparently. Hang on, well, we'll see. We may, better to ask for forgiveness than permission. Go ahead, Sandra.
Yeah, I sort of, I think that this is not going to remain a niche, but like Andrew, I think that's because it'll just be woven into the mainstream, and that's really our hope. And I think there are a couple of reasons why impact investing, and particularly investors seeking, private companies that have a social or environmental mission. I think that there's a huge demographic reason for this. There's when we do market research in our organization on demographics and whatnot, there's this, obviously everybody knows about the huge cohort of baby boomers. All the retiring baby boomers, a lot of wealth transfer, a lot of people who are looking for legacy. And what we're seeing is a lot of enthusiasm, and frankly, a huge amount of enthusiasm around looking at putting money to work in venture cap, private equity, a lot of these things where you actually feel a lot closer to where your money's going. You're not necessarily investing it in a huge corporation, where you're one of a million shareholders, but you're an investor in a small but growing, incredibly impactful, hopefully high growth company, and you actually feel a personal connection. Ever since we launched our social finance initiative, the number of inquiries from, frankly, like rich people who are asking about, well, when is there going to be a product that I can invest in, has been quite surprising. And when you look at the demographics, I think that is what's going to make this more mainstream as people look for ways to place their money that makes them feel that they're actually doing something with a legacy for their kids.
I agree with that, and fundamentally it's not hard. I'm not going to argue with it. But governments have problems. They have a problem with revenues, right? And businesses don't ever lobby governments to say, please make people feel better about their investments. They just don't. They come to Ottawa or Queen's Park and they say, please make sure we can be more competitive. That's all they care about. No one's lobbying to make people feel good. They're lobbying for it. So there's a revenue. So how do you, now it may be that a lot of these changes, and I'm interested in I guess what I'm trying to say is, what's the sort of the trim tab issue that turns impact investment? Is it pricing carbon, which is one area where that changes our way of value, it changes how therefore efficiencies and creates markets. So that's a trim tab moment, and I appreciate there's a real investment. But on a policy level, there's a revenue crisis, there's a competitive crisis. How does the kind of issues surrounding impact investing address those so it's in the government's interest from a revenue side and then from an investor side to make those changes? And then, of course, all the other elements, the consumer issues, those come into play.
So I'm not sure that it's about doing the government's job for them. They should get on with their own job. Really, this is about investors actually making money in a way that is also having an impact. And whether they feel good about it or not, it's also about new market opportunities. And so, for instance, very high impact opportunity in energy efficiency. We have built a stock of buildings in this country, all through North America, all through Europe, that are incredibly inefficient. When you are inefficient, you are wasting money. When you are wasting money, that's money on the table that somebody can earn a return on. And so it's sitting there, and it's what it needs is transaction mechanisms, so structures for investing. It needs aggregation, it needs investment. So, I think that, we're maybe getting a bit carried away that this is, so people can feel good about their money and all of that. Fine, that's great, but really, there are returns on investment sitting on the table that nobody is taking advantage of and that have multiple benefits. And that's where we need to make inroads from impact investing to show that it actually provides a return and has an environmental or social or whatever impact, show it, demonstrate it, and then you will see government coming and saying, okay, well, let's make that easier, or, let's give you accelerated capital cost allowances to make it even more profitable. I think that's the stage we're at. We have to be pretty hard-nosed about this, and it does not hurt, and of course we should encourage individuals and divestment campaigns. Like, all of that pressure will make this accelerate. But let's make a business case.
We have 9 minutes. We will try to get some. I know George Butterfield put up his hand, but he talked to me after and he said, why is it so darn hard to get people to invest in this stuff? I mean, you get in there and it's just, you make the case and you make all these arguments, and then it comes to putting the money on the table. It's tough.
We'll
hold on.
money.
Jane wants to get in there, and Bart, I think, who else wanted to? Oh, yeah. Okay, cool. So great. Erica wanted to jump in, Bart and Jane. Okay, let's go Jane, Erica, Bart. How about that?
In terms of why is it so hard, not to point the finger, but I think one of the problems is the Canadian media. Yeah. Because there is...
It's usually, and it's actually particularly my fault.
I mean, there is so much coverage in the UK, even in the US, in Australia, in Europe, in Asia, about all the work that the investor groups on climate change, which exist in every developed pension market except Canada, the work that they're doing to engage on these topics. There's no coverage in Canada. And we, this panel, need to have a strategy to help educate the Canadian media about how to get these issues in the paper and as part of the investment dialogue. And I'm happy to see that on the upcoming CFA one-day conference, Bob Litterman is talking about climate risk for an hour. And he was the chief economist with Goldman Sachs Asset Management, and this is his key focus. So it is a financial issue, and the Canadian financial media doesn't talk about it in the way that it needs to. And just on the other point, I would say that green growth is the future. The G20, the OECD, the World Economic Forum, they're all focused on this, and investors are part of that, and they're going to miss out if they don't get in, and if Canada doesn't encourage it through push and through pull, then they're going to miss out. And so it's an opportunity, and it's something that we need to act on.
Erica, then Bart.
Yes, I just wanted to highlight again and reinforce the fact that sometimes we're talking, and to something that Sandra was talking about, impact investing is about the issues, not the types of organizations that we're investing in. So I actually believe that the corporate sector has a tremendous role to play here, not only in terms of whether we're investing in them as public enterprises and their practices, but also in them being able to drive innovation. We're seeing design firms partnering with the UN to deploy warming bags with sensors for carbon footprint emissions across different countries in Africa. We need technology development. We need all different kinds of innovation. Yes, we need the small companies, but it's at the end the integration of the different stakeholders and how we work together and how we drive capital to sort of like leverage the work that everybody's doing jointly.
Bart.
Yeah, I was just going to say that the investment community is lagging. It's just simply lagging a global trend of business using capitalism to create change. It's clearly happening across the globe, and we all recognize it in this room. The truth is, if you guys go back 15 years and you talked about what CSR was, people were writing a charitable check to their local community organization and saying, I did it. CSR is done. It then moved to do no harm, right? We were all going to do no harm with our business and make sure that we can make money and simultaneously not leave the world a total wreck. And it's now moving towards, we got to make money and also make a positive impact with our business. It's clearly happening. Consumers care desperately about this. 86% of consumers say they expect all business to care equally about business and social issues. The investment community is the lagging piece of this, and impact investing is the tip of the spear work, okay? It is the tip of the spear work of trying to move some money into positive impact investments. But the truth is, I completely agree with Andy and Dave and the rest of the panel that the rest is going to follow. This is going to move from SRI being a positive impact rather than a negative screen. It's just the investment market is the hardest to move and the last to move. But there's clearly great indications happening across the globe.
Hi, Andy, do you want to comment?
Yeah, I mean, I think we're hitting all the topics. I see it as iterative. Like, there's no one answer, right? It's a process. You move some capital into this, those investors get engaged. They, some of the businesses succeed. We create entrepreneurs in these sectors. They create new businesses. They influence public policy. It's a process of a civilization moving forward, and it really fundamentally has to do with creating markets that get capital the right place. It's an iterative process. It'll happen over time. We are the ones that have to be persistently carrying this flag and looking for the successes and moving them into the mainstream, and then trying to build on those successes and then foster new areas. But two trim tabs, carbon taxes, and the other one really interests me. It's not in my space, so I don't know it very well, but social impact bonds I think are really interesting, because these are areas where governments are spending money, to David's point, and private enterprise could do it more efficiently. So if government can save money, I think there's a real opportunity there too.
All right, we have 3 minutes. Andy, nice segue. We'll talk about green bonds in a minute on the next panel. This guy, I'm going to take one question. I'm going to probably get in a lot of trouble for that. So make it short and good, or you're in serious trouble.
You got a scrappy entrepreneur, one of these companies slapping impact investors in the face. We've got no investment. We become a game changer, page 24, 25. Early stage investment, taxonomy, government policy, all great things to talk about. How do we inspire early stage? We've talked to Investeco, we've talked to RBC, we've talked to Mars. Who's inspiring and putting the money behind those of us on the front edge of that tsunami?
All right, Andy.
Well, I'll speak. It's a huge problem, I grant you. And by the way, there's a bigger problem behind this, a capital markets problem, not even an impact, which is venture capital's drying up across the country. We've gone from, it's basically a decline of roughly 80% over 10 years. And for those of us in the venture space, we have the same problem. We can't find investors who want to invest in startups, basically. So unfortunately, that's a real market failure. And right now, the governments have to get involved there. That's a true market failure. It's hurting our economy. Ideally, we would look at things like tax incentives like they have in BC and Nova Scotia for investors in private companies, those kinds of things to galvanize the very early stage. It's truly a market failure.
Yeah, you've touched on a great issue, and Andy's talked about it. Before the panel leaves, and you've been great, I'm going to just ask you each to do a haiku, because it's a policy convention week, and I know I'm revealing my increasingly boring bias towards government policy, and I get that. But because it's a business panel, I think the bridge between the business community and governments need to be much, much, much closer, and we've privileged the business element here. If on a policy weekend where the NDP and then the Liberals and then the Conservatives, if you had to say, okay, this is what I need, and now it's a federal level, but if you want to go provincial, I completely am flexible. On a haiku, what would you suggest as one policy shift that could bridge these needs? And I'll start at one end and then we'll end it.
Been thinking about this a lot, and from the federal level, I think credit enhancement policy would liberate a huge amount of capital for impact, particularly in the low carbon space.
Not only is that a good idea, Julia, but it was so short. I've never had a panelist on TV actually follow instructions like that. You have no future in politics if you don't talk more with the microphone. Okay, go ahead. Joanna, your view, and I know you had another comment.
I do have one comment, which I'll just say, just how folks here can get involved is to visit, to get to know a growing movement called B Corporations, okay? B Corps are the way that businesses here are getting involved in impact, and we have a B Corp alley somewhere in here today with B Corp representatives and companies throughout sitting here in the audience. So that relates directly to the folks here. In terms of policy for the Government of Canada, I think that they need to work towards creating, lowering the bar for people to get access to capital. So supporting, as Erica had said, ways that investors can invest and reducing some of that risk by allowing and creating some funds that they can get involved in. So reducing the cost of capital for early stage impact ventures.
Okay, great. And that a segue, Joanna, to Bart on B corporations, but why don't you just answer the notion on that, because it's practical. Our certification and rating systems needed to grow. I mean, how important are they to the impact investment? And is the rapid global expansion of B Corp certification really an effective way for investors to identify, as we just heard, credible social ventures?
Sure. So just a show of hands, who knows what a B Corp is? Wow, that's fantastic.
Still not every hand. Go. Just seriously, give,
so
give
for
the
those
definition.
who don't know what a certified B corporation is, this is essentially, think of it as a lead for business. It is an easy certification that you can use to identify a business that's using the power of capitalism to create change. That fundamentally they're focused on using their business to solve some social or environmental problem. We have about 750 certified B corporations across the globe. They range from Bullfrog Power and Corporate Knights, Green Living Enterprises, Now Magazine, Patagonia, ETSI, Warby Parker. Those types of organizations, they truly are the gold standard of businesses that are trying to address these challenges using the fundamental power of capitalism. The specific question with regards to policy is that we then ask those 750 certified B corporations to work with us to create a new legally recognized corporate form, something called a benefit corporation. That's passed now in 20 some odd, or 13 states in the United States, should be 25 or so by the end of the year. It's expanding internationally. It'll pass in Chile in the next couple of months. But fundamentally, it's changing the legal accountability of a business so that it is both given permission and protection, but also is accountable to create both social value and shareholder value simultaneously. So, to the question earlier about how do you drive more capital into the small and medium enterprises that are truly setting the standard, we encourage people to come find us and use our tool. We have a free tool. It's called the B Impact Assessment. It takes you about an hour and a half to 2 hours to go through. That'll show where you're creating impact in your business. It'll evaluate everything you do, and eventually, hopefully, join our community, because people are looking for certified B corporations to invest in. It's one of the ways that you know that your money's both making money and making a difference.
All right, thanks for that, Bart. Now, Julia really did the haiku, and now we've got sonnets, and by Andy it will be a Homeric epic, so I'll just remind you. Eric.
Okay, so if there was one thing that I would change, would be what Bart was talking about, but there's another thing that I would change, which is that might help address the market failure that Andrew was talking about, and it's create incentives for foundations to actually do more PRIs. Unlike the US, where foundations program-related investments count towards their disbursement quota, we don't have the same here in Canada. So there's still very high barriers, and we would be the types of investors that can come in with the early stage philanthropic capital investments that can help address some of the failures.
Excellent. Jane.
My one policy pick would have to be provincial, I think, from a regulatory perspective, but you could push it out federally, would be a requirement that pension funds and other institutional investors disclose how they're addressing environmental, social, and governance factors. This has been implemented in 8 countries around the world. It's been very effective as a catalyst, and it would have two key impacts. The first, it would force investment committees to talk about it and disclose what they're doing. It wouldn't tell them what to do, but it would get it on the agenda. And second, as importantly, it would, I think it would give a lot of comfort from fiduciaries that if this was a mandated policy measure that you had to look at this, that would mean that looking at it is consistent with fiduciary duty. So in the evolving concept of fiduciary duty that we're seeing for corporates and investors, I think that's a really important kind of step along the way, and it would give investment committees a lot of comfort.
I like that. All right, transparency on that. David.
Well, I mean, in general, I think for a political party, or as you were saying, I think just to embrace a true free market. But a thing that I haven't mentioned, the other obstacle to impact investing is never a short-term initiative. It's usually a long-term initiative. And our capital market and our government thinking unfortunately tends to be very short-term thinking. So if there is a way on the policy side of things to incentivize longer-term thinking, whether it be lower capital gains taxes on people who hold stocks for a longer period of time or are involved in these sort of things, that's something. Sort of get rid of the short-term thinking and the speculators in the markets, in the marketplaces. That might be a thing to do also.
All right, the lower capital gains tax, that's interesting. Sandra.
In the spirit of the haiku, I suggest an SDTC equivalent for early stage social enterprises would be great. That's it.
Oh, okay, can you just explain that? So I'll give you, you can write the haiku, but you get the little note at the bottom.
Okay, the asterisk to the haiku. So SDTC, Sustainable Development Technology Canada, it's a pool of about $500 million. It might be a little bigger now. Established by the Government of Canada to fund early stage companies, the ones that are finding it difficult to get the money to move their businesses forward, and specifically focused on early stage companies who are doing work in climate change, energy efficiency type work. They also have next generation biofuels portion. So bottom line is it's a pool of money for investing in early stage companies, very well run. It's been around for at least 10 years. And it has been very effective in that market. So wouldn't it be wonderful to see something like that, a fund put together with government support? I mean, it's a fund, so the money comes back. It's not grant money for early stage social enterprises that may not fit in the current mandate of SDTC.
Andy.
I've tried to stick to your haiku, so here it is. Carbon pricing reform is needed. Clarify that fiduciaries consider all factors, seek tax incentives for private investors.
I think that was about 30, but it was close. His Japanese name is Basho. That's all the time we've got. I know there's a lot of questions. I would just encourage you, part of the whole purpose of the Green Living Show is to interact and engage and make connections. The panel, I know, is very open to talking to you. I know there's a lot of good ideas. Obviously, there's frustration in trying to unlock the capital here, but there's also lots of, this is an example of entrepreneurs who have fought through and have made all these connections, and as the road to impact investing. And I think, the panel was kind of unanimous. When do you move out of the impact space and this becomes the normative culture? That will be part of the movement, is to change the vocabulary, as David said, change how we measure things, as everybody says, unlocking different mechanisms to do so, the push and the pull side. So Julia, Joanna, Bart, Erica, Jane, David, Sandra, Andrew. That was a great panel in a short time. I thought you addressed a lot of issues. Please give them a big hand.